Lesiba Mothata, Chief Economist at Investment Solutions, joins us now to look at the macro data. Lesiba, I got into trouble last week because I didn't have a Springbok jersey. Yeah. I wore mine so often it fell apart, so I don't have one anymore.
It's a good thing.
But I've got a lovely scarf here with all the old Springbok brands and so on, and I've got a spare one for you so that you also don't feel out.
There we go. Go Bokke.
That's right.
The Kiwis are going to know what's going on.
That's
tomorrow.
it.
Yeah.
All blacks must fall. All blacks must fall.
Yeah. Hashtag.
You've got to be careful how you say that. You've got to know you're talking about rugby.
Yeah.
Right, let's get into the numbers. Let's start with that medium-term budget policy statement. I think, again, people have said a good balancing act, Minister Nene, solid performance kind of thing, but he's got less and less and less room to move, and one wonders now with this education issue how they're going to do it. And we're going to get on to President Zuma in a moment, but tell me about that medium budget statement.
So, we've gotten accustomed to looking at budgets in a clinical way. It's a difficult balancing act. He had to maneuver a bit, and room for movement has been closed. And I think that's problematic. Where we are sitting in the country, the needs are far more reaching than the response that one is getting.
Yeah.
So when you look at the detail of the budget, debt was a concern, even for me from the beginning. That the pace at which we have accumulated it, now sitting around 49% of GDP, was problematic. And I was pleased to see the minister come on that in the medium term, in the next 3 years, they're going to stabilize that debt level.
Well, that's what he says, but other things may make it difficult. But okay, that's the context also for the education budget. The universities wanted, WITS was 10.5%. Most of the universities were of the order of double-digit fee increases for next year. The Vice-Chancellors and the Education Minister agreed on a 6% cap, which sounded like a major concession. Today, President Zuma has responded by announcing a 0% increase to varsity fees for next year.
On the matter at hand, we agreed that there will be a 0 increase of university fees in 2016. Discussions will continue looking at broader issues than the fees. It was agreed that the Vice-Chancellors will extend the time for the examinations period to compensate for the time lost.
I mean, this is an amazing victory for the students. I don't think we would have predicted this when at WITS last week on Wednesday it started. What you expected was the administrators and the government to resist. They gave in, and now they've given in again.
Indeed. I understand the plight of the students.
Sure.
I am, however, concerned that the situation is lending itself to a situation where we're getting distortions. Are we in China? Is a decree just passed and we all obey? Where is free markets, where prices are set in response to that?
You mean the decree is the president's decree now?
President's decree. So I'm concerned that it's setting an interesting precedent.
Also, Lesiba, the universities are autonomous in many ways. They've got to make their budgets work. As you say, if it's decreed from above, you will not increase. We're talking about price control.
Yeah, which is if you just think purely from what happens normally when you get a decree type of governance, is that distortions creep in, the quality of that which is offered deteriorates, and eventually what will happen, those who have money begin to send their pupils outside if
also,
you
what the call for free education ignores is that the richer people, well-off people, will be subsidized.
Yeah,
By not having to pay fees. So, but there's another interesting bigger picture here, is that economic realities are playing second to political realities. But I mean, often they do. Yeah. But this is setting some very interesting precedents for down the road.
And I must be honest, it's not comforting. It's not comforting. I was in conversation with one person who comes up north of Africa, and she had gone and said, we have seen this movie play out in our own countries. You get decrees, you get price setting that is controlled, and the quality deteriorates. The cost of you trying to get back that quality actually is higher than what you're trying to achieve in the first place.
And what do they do next year? They'll have to get an increase next year, and with the students so emboldened by their success, who knows. Anyway, these are interesting questions, and I hope the students are now going to write their exams, otherwise the system backs up, and a whole generation, a whole year of people can have their careers ruined. Big picture, Nhlanhla hinting at interest rate increases. He expecting CPI to breach the 6% mark twice in the next 4 quarters.
Yes, it makes sense, because inflation expectations are anchored at the upper end of inflation expectation range at 6%. So the currency depreciation has not even been felt into the CPI as yet, and it could be quite substantial. It makes sense. If the Fed actually hike interest rates by December, we're likely to see even a steeper interest rate hiking cycle from South Africa. He has to continue speaking hawkish. Despite other emerging market countries like India, for e.g., it has reduced interest rates 3 times this year, and their rupee hasn't depreciated as much. So we're in a situation when the rand is beginning to really alter the outlook of monetary policy in a substantial way.
Let's get to the bigger picture with China. They put out a GDP estimate. I always am skeptical in a large, complex economy like that, which is statist and command economy in many ways. How much can we trust these numbers? But anyway, they come out with 6.9%, which is better than was expected, which was 6.8, but it was worse than 7, which is the magic thing that we want. Now, of course, arithmetically, you can't go on forever growing at 7%. It's just impossible.
It's impossible. In fact, for that specific economy, if you look at real activity data, electricity production, bank loans, and rail freight volumes, just capturing what's going on in the economy, the growth rate is below 5%. So what I'm saying is the number, it's not true. 6.9 is not the Chinese growth.
So surely the measure, as you say, has to be number of freight trains running, number of iron ore shipments, actual shipments, not to say what the growth figure is, but how much is actually going there.
It's just written. So the Chinese number, the authorities, I think they sit down and write what it should come out to be. It's problematic, but you can feel the impact of Chinese slowdown throughout the globe. The equity market is down 40%. The ripple effect elsewhere in emerging markets, in commodity producing countries, continues to be felt. So China is in a slowdown. It is to be expected, however. I don't know why they will resist that slowdown. After increasing to a middle income level, which China is at now, on a per capita basis, in fact, China has surpassed South Africa in terms of advancement. We always were ahead of them. Now they've caught up because of the sheer size of the economy that has grown to close to $9 trillion in nominal terms, the second largest in the world. It makes sense for it to slow down. So the ripple effect that is going on in the global economy, I think is potentially overdone, because we had to expect this. South Korea was once an emerging market that grew to a plateau after some income was achieved on a per capita basis. Now it has slowed to moderate growth rates. So has Japan when it was emerging market. So was Thailand. All the Asian tigers arrived to a situation where there's a slower growth that happens after a robust growth that happens in a decade.
It's got to happen. That is Lesiba Mothata, Chief Economist at Investment Solutions. Lesiba, what's the score going to be tomorrow? Michael said we're going to win by 3.
By 3, whatever margin.
Points.
Whatever margin is going to be 3.
I'm happy with 1.
Well, I think they'll do particularly well. Talk about 10 points maybe ahead of.
Okay.
They'll do well.
But you got to give me my scarf back before you go.
Go Bokeh.
Go Bokeh.